Hi guys, and welcome back to another edition of Dummy's Guide to Investing How-To Series, where we take a look at pretty much everything online and everything that it takes to get involved in this investing world, oftentimes intimidating and complicated, and that's why we're breaking it down for you in an easy to understand visual format. So we're going to continue our series here on how to read a stock graph. So shooting right back here to TradingView and looking at Apple again, we're going to take a look right now at point and figure charts. Now, first glance, you can see that these are quite a bit different than the other graphs that are available out there that we've looked at. Looks like just a bunch of X's and O's here, so it's quite a bit different, and we'll get into explaining just what this is, what this means, all these X's and O's, and why it's actually gaining popularity in recent time with certain traders, because point and figure charts are basically just another example of a chart that relies solely on price movements and not time intervals during the creation of the chart. In this way, P and F charts, or point and figure charts, are similar to the Renko and Kagi and line break charts that we've already discussed. The basic understanding of point and figure charts is that they are comprised of a series of columns that are made up of either X's, as we can see here, or O's, green X's, red O's. So that probably gives you an indication of what that means, right? Well, they were originally popular actually back in the 1900s before computers, and they were a way for technical analysts to chart large amounts of data in a short period of time. But they kind of fell out of popularity as computers and more advanced form of charting and analysis was developed. But there's been a renewed interest in noise filtering charts, which focus on price movements alone, which is why this is starting to gain popularity again. So taking a closer look here, let's just kind of get right into just what this means. Excuse that. The X's, as you can see here, and the O's that make up the columns that occupy the space are called box size. Now, the box size is a user-determined value. So this box size is user-determined. When a price moves enough in the same direction as the current column, a new X or a new O is added. When stock prices close far enough away from the opposite direction, a new column begins with either an X or an O. So for instance, as long as a price continues to move in this within the predetermined user amount, a new X is formed moving in the same direction. When the price changes enough, depending on what you set your settings to be, a new O or X, depending on which direction, will be formed and then will be added according to the movement of that particular column. So you can see how long certain stocks continue to move and trend in the same direction. Again, this kind of basically takes away all time and indications as well as small fluctuations in price. This really focuses on the bigger stock price movements. So the amount that the price must be moved is determined by the reversal distance. Now the value is created by multiplying the box size by another user-defined value. So to start using this chart, which is a simple chart, you need to understand a little bit in how to set the parameters so you know just what you're looking at when if you start to use this type of a stock. Therefore, let's say that you set a box size to $1 and the reversal amount is set to $3. So every time the price moves $1 down, a new O is formed. Every time your predetermined set value is moved $1 or whatever you set it out, another O is formed. Even if it had gone up a little bit and then down a little bit, but nothing will be formed until a new block is formed until it continues and reaches your predetermined value. Now let's say it takes an upward change of $3 to determine to end the the O column and start an X column and then start working its way up. So each column has to be either an X or an O. That's the simplicity of this kind of. There can never be two different letters in the same column. X columns and O columns will always alternate. There's not going to be an X column next to an X column. It'll always alternate, and you will never see two X columns side by side or vice versa. So pretty straightforward. And every time that investors start to use this, it's a very quick indication and a very quick view of just how a stock is moving. So you can see that there's very predefined upward and downward trends of a stock, and you can see long runs and short runs, whether they're up or down, using this form. So that's pretty much the basics of the point and figure charts. We will get into more in-depth using this chart and other charts as well, but these are just brief explanations as to what these are and how to read them. So thanks again for stopping in here at Dummy's Guide to Investing, and we'll be with you every step of the way.